If you could only own one monthly dividend stock this year, you should make sure that it's one that actually grows your wealth, not just drips pennies into your account. That said, there's one stock that's outperformed the S&P for the last 10 years and never missed a dividend payment, even in a crisis. So in this video, I'll tell you what that stock is, why it's so different, and how it can reshape your entire portfolio. So let's kick things off by doing the one thing that you'd never expect a YouTuber to do, which is to tell you the stock up front, without you having to sit through 10 minutes of me stalling, trying to get you to watch this entire video. So the one monthly dividend stock that you should be paying a whole lot of attention to right now is Main Street Capital, or the stock ticker MAIN, Maine. Now I have to say, if you're the kind of investor who appreciates my approach of getting straight to the point, please hit the subscribe button to show some love, as I always try to skip the fluff on my channel and dive right into what actually matters. Now, before you go, and I know you're thinking about this, telling everyone how this one guy, Ron, he told you that
Maine is going to the moon and you're going to bet your life savings on a random dude's stock, recommendation on YouTube.
What the hell is even that?
Stop, right? I suggest that you sit through more of the video to understand why I'm recommending it, okay? So Maine, it isn't your typical Wall Street company. Instead, it's a business development company, or BDC for short, which basically means that it acts like a financial partner for smaller, fast-growing businesses that are usually flying under the radar.
Fun fact, there are fewer than 50 publicly traded BDCs, and Maine is consistently ranked among the top 5 by market cap and investor sentiment.
Yes, exactly. So it shows how rare this company actually is. Maine focuses on the lower middle market. That's just a fancy way of saying that they invest in companies that are too big for your local bank loan, but too small for, the big private equity sharks. We're talking about businesses with, 10 to 150 million in annual revenue, which is generally an underserved market. These are the kinds of companies that, they keep the economy, really humming, but don't make the headlines. So how does Maine make money? Well, it's pretty straightforward. So as you may expect, Maine, they provide loans to these companies, often with flexible terms that help them grow. But sometimes Maine also takes an ownership stake. So if the company takes off, Maine shares in the upside. Maine earns interest from the loans, collects dividends from equity stakes, and occasionally scores big when one of its companies gets acquired or goes public. And Maine isn't just tossing money around either. They're hands-on partners, right? They'll often take a seat on the board or work closely with management to help these businesses make smart moves. That's a big reason why Maine's investments tend to perform well even when the economy gets rocky. So here's an actual example, right? So just recently, Maine, they invested $12.5 million to help recapitalize a vascular care management company in the Northeast. And this isn't just a random bet, right? Maine partnered with the founders. They provided both a loan and equity investment, and is now helping this healthcare provider expand its reach and improve patient care. That's the kind of impact that Maine, really aims for, is supporting companies that make a difference in their communities while also generating steady returns for shareholders. And Maine's portfolio, it's massive and diverse, right? With investments, they spread across more than 200 companies. At the end of 2024, that's where they were at that point. And you'll find everything from healthcare to, tech and manufacturing, even essential services. This kind of diversification, it helps smooth out the bumps if one sector struggles, because others can actually pick up that slack. And the company has grown its capital under management to over $8.2 billion since its IPO in 2007. And its stock price has been in a very solid upward trajectory, recently bouncing back towards its 52-week high after strong Q1 2025 performance. But here's the thing, a great dividend stock is really only as good as its ability to deliver consistent, reliable cash to your pocket. So how does Maine stack up when it comes to dividends? Well, you might be surprised by just how steady and rewarding this monthly payout can be. So let's break down Maine's dividend track record and see what your investment could actually earn you. Okay, so monthly payments are only impressive if they're consistent, right? Maine has been paying out monthly dividends since 2007. And here's the thing, they've never cut their regular dividend, not even during the chaos of the 2008 financial crisis or the crazy swings of the 2020 pandemic. That's a track record that most companies can only dream of. So as of May 2025, Maine's monthly dividend sits at 24 cents per share, which adds up to $2.88 per share over a year. On top of that, Maine has a habit of throwing in special dividends when times are good, sort of like, a bonus round for shareholders. So for example, in 2024, Maine paid out a special dividend of 0.275 per share in December, giving investors kind of a little something extra during the holidays, right? So what does this mean for you in real numbers? Well, let's say that you invested $10,000 in Maine at a share price of $44. That would get you about 227 shares at present. With the current monthly dividend, you'd be looking at roughly $54.48 in dividends each month, or about $653 a year, plus any special dividends that might come your way as well.
And that $54.48 per month might not sound huge, but reinvested monthly, it compounds more than you'd expect over a decade.
Yes, compounding, it is the name of the game, and doing it with Maine could be a huge win if you can swing it. The company's payout ratio, which is the percentage of earnings paid out as dividends, is healthy. It sits at around 77% as of the latest reports. And frankly, that's higher than some of the most stable dividends out there, but they've also never cut the dividend, so obviously it's working for them. That means that Maine is keeping enough cash on hand to really weather storms and reinvest in new opportunities, while still rewarding shareholders generously. And what about dividend growth? Because that's important too, right? So Maine's regular monthly dividend has grown from 33 cents per share annually in 2007 to $2.88 per share in 2025. That's nearly a 9 times increase over 18 years. So it's not just the consistency that stands out here, it's the steady upward climb, even when the economy throws curveballs. Maine's ability to keep paying and even growing its dividend comes from the strength of the businesses that it invests in. And when those companies win, Maine wins, and so do you. But income is just one side of the story, right? The big question is, can Maine actually continue to build wealth over time? Well, let's break down the stock's performance and see if this dividend machine is also a growth engine. All right, so let's talk about the big picture here, right? So Maine isn't just a steady income dividend machine. It's also delivered some seriously impressive long-term returns. So over the last 10 years, Maine has averaged an annualized return of around 14.2%. So for context, that's actually better than the S&P 500's average of 10.5% over the same period. And it blows away most other monthly dividend stocks. So you're not just getting a paycheck every month in dividends, you're also building real wealth over time. But what about the stock price itself? Well, Maine's share price has shown resilience and growth, even through some wild market swings. So for example, during the COVID-19 crash in 2020, Maine's price, it took a hit just like almost everything else did, but it rebounded very quickly. And early in 2025, it's already trading at near its all-time highs again. That kind of bounce back, it isn't luck. It's a sign that investors trust Maine's business model and the management, which is more important. Now let's get into why Maine's future looks so promising as well, because Maine's secret sauce, it's focused on sectors that are built for the long haul, right? So think data centers, healthcare, manufacturing, and energy infrastructure. So for example, one of Maine's recent investments was in a company that designs electrical power solutions for data centers. And with AI and cloud computing really exploding, demand for data storage and processing is only going up. And that means that Maine's portfolio companies are riding some of the strongest trends in the economy right now.
With AI adoption expected to grow over 30% annually, data center infrastructure is becoming the new digital oil.
Exactly. There's no doubt this is a big industry that's only growing. And here's where the current economic climate could actually give Maine a boost. If interest rates start to come down, it'll be cheaper for Maine's portfolio companies to borrow money and grow. And on top of that, when the economy is stable and deal activity will really start to pick up, Maine can exit investments at higher values, which will put more money back into shareholders' pockets. So as of Q1 2025, Maine's non-accrual loans, which are basically investments that aren't paying as expected, are just 1.7% of the portfolio at fair value, which is super low and shows just how well these companies are holding up. Maine's management also keeps things conservative. They don't load up on risky debt, and they keep a lot of cash on hand. In fact, they have over $1.3 billion in liquidity as of Q1 2025. That means they're ready to pounce on new opportunities or support the companies if things get tough. So if you're looking for a stock that really, pays out every month and actually grows your money at the same time, Maine checks both those boxes. But, and there's always a but, no investment is perfect. So before you go all in on this thing, right, you need to know what could go wrong. So let's talk about the risks and what to watch out for, because being a smart investor means seeing the entire picture. Now, here's a question that you should always ask before hitting that buy button, right? What could go wrong? Well, Maine has a lot going for it, but let's pull back the curtain here and get real about the risks, because being prepared is how you will win in the long run. So first up, Maine's bread and butter is lending to small businesses. And that's awesome when the economy is really humming and doing well. But if things take a turn, think about it like recession or tighter credit or a sudden spike in interest rates, some of these companies might start to struggle. And when a borrower, they can't pay back their loan, that's called a non-accrual. And while Maine's non-accrual rate is impressively low right now, that number can rise if the economy hits a rough patch. And let's also talk about interest rates for a second. So Maine, they make their money by lending at higher rates than it pays to borrow. So if rates move in a weird way, like if short-term rates, spike, but long-term rates don't, Maine's profit margins could get squeezed. Plus, if rates drop too much, the interest that Maine earns from new loans could shrink, making it harder to keep those juicy dividends coming. Another thing to keep your eye on is Maine's focus on the lower middle market, which means it's dealing with companies that really don't have the deepest pockets or resources of these, huge corporations comparatively. These businesses can be more sensitive to economic shocks, supply chain hiccups, or even, just losing a big customer. So while the upside is higher, the risks are too. And there's also the market risk. Maine's stock price, like any other, can swing with broader market moods, even if the underlying business is steady. So if the market gets spooked, Maine's price, it could dip, and that can really test your nerves if you're not ready for a little roller coaster action. But let's make this, into a quick hypothetical, right? So imagine Maine invests in a manufacturing company, right? And they supply parts to the auto industry. Well, if a recession hits and car sales drop, that company could see the orders dry up, which is going to make it really tough to pay back the loans and grow profits. That could ripple back to Maine, impacting its income and, in worst case scenario, its ability to keep dividends steady. But here's the good news on that. Maine's management, they have a history of knowing these risks inside and out. They keep a conservative balance sheet, maintain strong liquidity, and spread investments across a ton of industries to avoid putting all their eggs into one basket. Now that doesn't eliminate risk, but it does help cushion the blow if things get choppy. So if you're thinking about Maine, just go in with your eyes wide open. The rewards are real, but so are the risks. And the key is to stay diversified, keep your expectations realistic, and remember, monthly dividends are awesome, but they're not a magic shield against market storms. Now, Maine is great, but it's not the only dividend stock that I've got my eye on. So in this video right here, I explained 5 dividend stocks that I'd trust with my life savings, and I rank the top contenders that I'd feel confident putting 6 or 7 figures into and why they've earned that trust.